Hello, welcome everybody. As we wait for everybody to join us from the waiting room, we'd love for you to pop into the chat where you went to elementary school, name of your elementary school, and maybe the city and state as well. Just get a sense of who we have in the audience.
Yo voy pa' la tuya. Si tú me llamas, ¿pa' qué te voy? Mamá, si tú quieres, yo voy pa' la tuya. Si tú lo quieres, yo te lo doy. Date chucu, 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 mamá. Mira, tremenda infladera la tuya. Si yo no te di la confianza, llegas haciéndote la pilla. Y cuando yo ataco te espantas. Estoy pa' formarte desorden y tú estás en la bobería. Mira.
Well, welcome everybody. Wow, we really went all over the place for elementary school. And yes, Kumar, I think you get best traveled for your elementary educational experience. Hello, I am so delighted to welcome you all here tonight. This event is called Leveraging Impact Investing for Education. Hopefully that's what you signed up for, because that's what we're going to talk about tonight. I am Colleen Gregerson. I'm the Executive Director of Battery Powered. This spring, for those of you who are part of Battery Powered, you will know that our giving theme that we are focused on is public education, how we can support California's public school students as they return to the classroom. You know, this comes as no surprise to any of you, I'm sure. You know, the reality is that even before the pandemic, our resources were very strained. We had a very resource-strained education system that was struggling to meet the needs of all of our diverse student population. And prior to COVID, only half of California students were meeting English language arts standards, and only about 40% were meeting math standards. Despite policies designed to allocate funds more equitably, there is still a tremendous difference in how districts are resourced, and this falls along very familiar economic and racial lines. COVID exacerbated these problems, but it did not cause these problems. Now, at Battery Powered, we focus on philanthropy, the areas of this very broad issue of public education where philanthropy can make a difference. But not all solutions are well suited for philanthropy. Some require government investment, and others are more suited to some more traditional financial capital like debt and equity and other forms of investment. So for issues as vast as those like public education or our previous giving theme, climate action, that many of you were a part of, we need a diverse set of investment tools and vehicles, everything from public funding to traditional investment and impact investing. So today, what we wanted to focus on is learning more about the role of impact investing in supporting educational outcomes. So that's what we're going to spend about an hour on, and we're delighted to have you here. I would love to get a sense of the experience level that we have in the audience. I'm going to put a poll up for you all to answer. Hopefully you all can see that. How much experience do you have with impact investing? Are you brand new in it? Have you done a little bit, dabbled in it, or have quite a bit of experience? We'd love to get a sense of what we have in the room so we can modify what we talk about based on the experience we have. So while I leave that up, I am delighted to be bringing along on our learning journey tonight, Toniic as our co-host. Toniic is a global action community of impact investors, and this is the second event that we have been honored to co-host with them. Some of you may have joined our last event a couple of months ago where we focused on impact investing for climate solutions. Tonight, we're going to expand on that conversation. We're going to go a little bit deeper on the how around impact investing. And we're going to hear from investors who are focused on educational outcomes and what their portfolio looks like and how they're building that. So before we dive into that, let's see. It looks like I'm going to end this poll and I can share the results. It looks like Most of you have some experience with impact investing, a couple of experts. Good, we can draw on you. And at least one person who's brand new to it. So we have a wide variety here. That's awesome. Thanks for sharing, everyone. So I'm going to welcome Toniic CEO and Battery member, Adam Bendell. Adam, we are delighted to have you here once again. Thanks for joining us.
Pleasure, Colleen, always to be in conversation with you and fellow Battery members.
Great. Well, Adam, I thought we could start with talking a little bit about the why of impact investing. You know, how can you explain the importance and the role of impact investing as part of a broader portfolio of diverse funding instruments to really move forward the different kinds of social impact that we care about in the world?
Yeah. So I think the answer to that question depends on sort of what you're comparing it against, right? So if you are thinking about philanthropy and saying, what can I achieve with impact investing that either I can't achieve with philanthropy or I could achieve more effectively with philanthropy, with impact investing than philanthropy, well, then you would, you'd answer that question in one way. And but there's and that may be, I think I'll kind of come back to that way in a second. The other way to think about it is, what impact am I having? What net impact am I having with all of my resources? And if you think about a traditional, it's just a simple model to think about it, which would be a kind of US foundation. American foundations are required to distribute at least 5% of net assets each year in grants or grant-like things, and basically in support of their programs. And so if you just take that sort of simple math of you're sort of, giving away 5% of your assets or your endowment each year, what's happening with the other 95%? And so as an example that is just kind of clearer, perhaps than education, back to our climate example of our first conversation, if you are invested 95% of your wealth, or the endowment of this hypothetical foundation is invested in enterprises that are affirmatively contributing to the climate crisis or doing nothing to mitigate it, then it is likely that if you are, in this example, a climate-focused foundation, the 5% that you are granting is unlikely to overcome the negative effects of the 95% being used in ways that you maybe haven't investigated that are either affirmatively harmful or just not at all helpful. And so that's one way to think about the question, right? Is not just, well, can I do something more with or more appropriately with impact investing than I can do with philanthropy, but rather, how is all my wealth, how all of my resources being deployed in service of humanity? And of course, if you come in that door, then you might quickly say, well, wait a minute, I need to live on this if I'm retired or, otherwise, whatever. People have all kinds of constraints. I may have liquidity constraints that say I can't tie this all up forever. Any number of constraints that come into building a portfolio of investments. And we would just say typically that impact becomes another constraint. It's not that it replaces everything else and suddenly your investment portfolio looks just like your philanthropy portfolio, but rather trying to achieve net positive impact becomes an additional constraint that you layer into the portfolio. And many of our members, and we have a lot of members in common between the Battery and Toniic, and some of them are here today, and they perhaps will share with you how they think about that. But I think most would say they've successfully done so to some degree, which is either mitigating the harm of the portfolio as a whole, or and often being able to achieve some really deep impacts with investments alongside their philanthropy. And then back to the other way to think about it, which is sort of philanthropy or impact investing, which things should I do? There are certainly some problems and some solutions that are really only amenable to philanthropy. They're just not investment ready. And there are others that are investable. And many folks in our community think about those problems and say, wow, can we leverage the tools of capitalism to solve big world problems or contribute to solving big world problems alongside our philanthropy? Yes, we think we can. And if we do that, then we'll be potentially seeding a sustainable business that will earn revenue, that will perhaps at worst offset the need for ongoing philanthropic support, and at best actually become totally self-sustaining and maybe even a big scalable business that will both make money for the investors and contribute to the solution to big world problems.
And I think the example that you used of a foundation and, 5% of their endowment is to philanthropy and 95% investment. I think that analogy works just for an individual and their own, bank account, for example. When you look at what percentage of your assets is going to philanthropy versus other things, I think you can apply that same lens. You don't necessarily have to have a foundation to think about, where are the majority of my assets being invested in, and how does that advance or harm, the good that I'm trying to do in the world. You mentioned impact as a constraint. Can you just take me one step further on explaining what you mean by impact as another constraint on your investment portfolio?
Sure. So those of you who are experienced investors will recognize that investment portfolios often start with what's called a strategic asset allocation, where you think about, in the simplest version of that, what percentage of your portfolio do you want in fixed income versus stocks or equities, and in more, slightly more sophisticated versions of that, other asset classes. And you're creating that asset allocation out of a series of constraints. How much income do I need to get every year? How much growth am I trying to get? What's my risk tolerance at my stage in life, or for whatever else this portfolio is aimed to support? Do I want to be exposed to my home geography? So let's say we're Americans here, and so our home geography is the United States. What percentage of my exposure do I want to be outside of the United States, either in developed markets or in developing markets? So these are all kind of constraints that would go into building a traditional portfolio. So on top of that, we just add one more, which is impact, right? Positive impact. What can I do to address big world problems with this money? And how can I maximize that positive impact within my other constraints? And so if I have a pool of money that is really devoted primarily to positive impact, and certainly right next to your philanthropic bucket, there might be just such a thing, because obviously philanthropy, from an investment perspective, philanthropy is 100% negative financial return. Now, hopefully, tremendous, as a friend of ours would say, a boatload of impact, hopefully tremendous positive social and environmental impacts. But from a financial perspective, 100% negative return, well, there's this kind of bucket of money right next door to that, at least theoretically, that is very deep impact. And as you move further along, where you have, each sort of pot of money in your overall resources has a job to do, you could move further and further, and there's probably a part of your money whose job is to support your lifestyle. Fair enough, right? But we're focusing here on the whole of that and saying, well, at the end that's closest to philanthropy, we can probably achieve some really deep impact and get some financial return. And at the end that's further away from that, we could still kind of filter, do some screening or filter out the investments that might be contributing negatively to the goals that we have and get those out of the portfolio. And the mix of all of those, all the way from the philanthropy to the kind of purely market rate, becomes our kind of combined set of outputs, or a kind of total return from both a positive social and environmental impact perspective and financial return.
No, that's a nice way to think about that kind of that scale. We promised to dive into a bit more of the how, and so I wanted to ask, for those who are in the audience with us tonight, If you could pop into the chat what some of the barriers are that you face in your impact. Sorry, I've learned how to control my children to be quiet when I'm on Zoom, but not my dog. So I apologize for dog background noise. But if you could put into the chat, what are some of the barriers that you are facing in getting involved in impact investing, or that you faced as you started your impact investing journey? I see we have a lot of people that have at least some experience. And then Adam, I wanted to talk with you about that because you work with a lot of different impact investors at various points in their journey. What are some of the most common barriers that you see and hear for people really, either getting started or going deeper in their impact investing portfolio?
Right. So, like probably everyone, I sort of the first answers to these questions come from the hard-fought personal experience, right? So, my own personal experience was having advisors initially who were very anti-impact investing. I remember bringing my first deal to my then accountant, who said, "What are you doing here? Is this meant to be philanthropy, or is this actually an investment?" And I said, "Well, no, it's an impact investment. It's meant to have both, some financial return and philanthropy, a philanthropic contribution or positive impact probably." And he said, "Oh, no, you are thinking about this all wrong. You're muddled headed. The thing to do is to make as much money as you possibly can with your traditional portfolio, so you'll have more money to give away in your philanthropy." And what I ended up giving away actually was that advisor, because I realized over the course of time that he was an impediment to my doing what I wanted to do, not really a facilitator. So I think getting aligned advisors is probably on the short list of the most important things you can do. If you are, if you work with advisors, if you're self-advised, then you have a lot more freedom. And one of the things that one of the beautiful things really about high net worth individuals and small family foundations and family offices, which is sort of Toniic's sweet spot, is we don't hear, very often in our community, "I can't do that. That's a breach of my fiduciary duty." I see in the chat, if you do impact investing, you're necessarily going to lose money. And that would be a breach of my fiduciary duty, and we can't do that, and blah, blah, blah. Well, in family offices and among high net worth individuals, they're not facing that constraint so much. It's your money, you can do with it what you want. And if what you want is to try to maximize the combination of impact and financial return, then you can do that. But, not just in the advisor world, but in general, you will encounter that misconception all the time. So that's clearly one. And then I also see in the chat, Colleen, the sourcing of impact investing being time consuming, relationship driven. I mean, those are really, that's obviously spoken from someone who's been there. And that I think ties into, the solution to that problem is basically to try to get help. And there's lots of ways to get help with that, aside from advisors. And one is a community of peers, right? And so that's kind of what we try to provide to our members, is that sense of community, that people looking for investments in a particular area or in a particular thematic area, in a particular geographic area, can find one another. And it's part of what we try to do is matching, and it's both matching, it's kind of a matchmaking job, right? It's partly matchmaking investors with investment opportunities that they might be interested in. It's also matchmaking investors with other investors working on the same issues, because there's so much to learn, and you can get a lot of kind of coattail effect, positive coattail effect from hanging out with and interacting with people who are trying to solve or address at least similar problems to you in similar ways. And that becomes a huge multiplier effect with, of course, people this is everything turns on relationships, and so most people won't sort of throw all their money in with anybody else without sort of getting to know you. But over time, many of our members find themselves investing with one another over and again because they've learned how the other person thinks about it. They have come to trust their diligence. One might lead in investigating or in due diligence of one opportunity, another on the next. And that becomes a great sort of source of leverage, right, of your time, because however much money you have, your time remains limited. And so finding ways to limit or to get a lot of leverage out of your time investment is a really important way to bring those barriers down.
I'm glad you talked about that, because I see Battery Powered as a community of philanthropists who are doing this together, right? We are sourcing organizations and learning about them together and making joint decisions. And I see Toniic very much as a similar role, a network of impact investors to work and learn together, so that you can advance your impact more. But one thing that I hear a lot and I feel myself is that philanthropy feels more accessible. It feels like the door is more open, or maybe we just know how to walk through that door a bit better, and impact investing sometimes feels less so. Why is that? Why do you think that is the way that it feels for many people?
Because it's true. It's, as I said, it's easiest to get deep impact in certain parts of your portfolio and harder to get it in others. So if you are investing entirely in public markets, there's a pretty robust debate in our community about just how much impact you can have. And the reason for that is that the public companies in which you invest are not typically that interested in who you are or what you care about, and they may not even know, right? So there's this concept in philanthropy, as there is in impact investing, of additionality or contribution. We use these words somewhat interchangeably. They don't mean exactly the same thing, the difference being that additionality usually includes, and you can tell that it was me that caused it to happen. Contribution doesn't, and says, would this have happened without all of us doing this, putting our money to work in this way? And if the answer to that is no, then there's contribution, and even perhaps without the attribution, there's a kind of collective additionality. And so if we are focused on contribution additionality as the marker of the deepest impact investments, that's hard to do in public markets and a lot easier to do in private markets, meaning private equity investments, private debt investments. And the challenge of those is, first of all, many investors have never made a private investment of any kind. And so if you get started and you try to, the first impact investment that you want to make is a direct equity investment in an early stage startup in Kenya, you not only have to learn about impact investing, you have to learn about private equity investing as well, and what the deal terms are like and what looks like a good deal or not. And then if you move into the fund space, then there's meaning investing into private funds, then there's a whole learning curve of that, which is, again, quite independent of the impact part of it, right? But just to be a smart investor, you need to understand what is smart, what are the guide rails for private equity investing? How do I think about, multiples on invested capital and all kinds of other, maybe not that interesting to you, acronyms about financial return, but very important in constructing a judicious private portfolio. So there's the learning curve part, which is harder, I think, than simply writing a check, which is at least the entry point for philanthropy, is just writing a check. There aren't so many vehicles like Battery Powered, frankly, which is actually a really great, I think of Battery Powered as not just collective philanthropy, but also the educational aspect of it, right? Where you are teaching by example, folks who may have done their philanthropy in a kind of more friends and family or knee-jerk way of like, oh, where do I give my money? I give it to my friends and their causes, and they give to my causes. There's nothing wrong with that. I suspect all of us do it. But strategic philanthropy doesn't start from that place. And now I'm really in your wheelhouse where you should be given this speech. But strategic philanthropy starts from where can I have the most impact with my money? Where is it needed? How will I judge effectiveness? And that's what Battery Powered does collectively, right? So you've got battery members who are pooling their resources and then using the learning, that pooled resource and the kind of backbone of Battery Powered to make smart choices. So in many ways, a similar kind of mechanism is necessary for impact investors, or at least it's helpful for those who are just getting started to be able to leverage the learning and the skills of others who have been there, done that, in order to get started. And then I think the final thing that makes it feel less accessible is that there's, you can't read about the prices of private investments in the Wall Street Journal. They're not accessible to retail investors. They're only accessible to accredited investors or greater, so people at a certain wealth level. They're inherently a little bit, made to feel a little bit scarce and hard to access. And so all of those things, I think, combine to make it feel less accessible at the deeper end of the pool.
Yeah, I totally agree. And I might add to that too, is with philanthropy, that many people often have some experience from their family with that, growing up, that their parents were giving back, whether it was through volunteerism or charity work or, giving to the church, that they have some kind of familial history of seeing that. And that is probably much less likely to be the case with impact investing, which of course is a newer endeavor. I think this would be a great time to invite Dipti from Toniic to introduce our investor for the night, our person who's going to tell us a little bit more about their education portfolio. So Dipti, I'm going to turn it over to you.
That sounds perfect. Thanks, Colleen and Adam. Hey, everyone. I am super thrilled to be joined by Toniic member Schmidt Futures. Many of you probably are familiar with the Schmidt name, but wanted to share a little bit more about Schmidt Futures and then turn it over to Kumar. Schmidt Futures, and the reason we picked them is really because they invest and make grants to for-profit and nonprofit organizations. And the focus and the reason they do this is so that they can support the most talented people and most promising ideas in technology, in scientific breakthroughs, and paths to shared prosperity in society. And so with that, thrilled to have Kumar here with us. Kumar Garg is the managing director and head of partnerships at Schmidt Futures. In this capacity, he works to help all of the Schmidt Future programs find successful leverage and also helps to run the technology and society portfolio. Prior to being at Schmidt Futures, he helped shape science and technology policy for the Obama administration for nearly 8 years and served in a wide range of roles in the White House Office of Science and Technology Policy. And prior to his role as a senior leader at OSTP, he worked on behalf of parents and children seeking educational reform as an educational lawyer and advocate. So thrilled to have kind of the broad expertise that Kumar is bringing to us this evening. So with that, I'll turn it over to you. Thank you for being here.
Amazing. Well, thanks everybody for having me. I'm coming to you live from my closet, which is, as I slowly build ourselves out from the pandemic. And I've got Sam Ching on our team also joining us. And it's wonderful to be with all of you. Hopefully we can actually meet in person soon as we slowly build back. I will do this quickly just to give folks a little bit of a taste for how we work. Schmidt Futures is pretty young as an organization. It was created, Eric and Wendy have had a family foundation for more than a decade. Schmidt Futures was created in the fall of 2017 to sort of focus on science and tech more broadly. We don't categorize around philanthropy versus impact investing formally. We sort of invest across a range of philanthropic bets as well as a range of investments, all with a sort of science and tech lens. It's sort of in early 2019, we started to really formalize our work in education and created the learning engineering program, I think my goal here is to just quickly run you through at least some of the ways we've been trying to bring our science and tech lens to education. This is with the caveat, this is actually not a particularly comprehensive view. If you said, hey, does this cover everything that's important in education? I would say it covers very little. We just tried to think about one specific lens that, that we thought we both had something specific to share on that sort of touches across both technology from an investment standpoint and the impact. So we'll run through it and then happy to answer questions. You know, as Dipti was saying, I've been involved in education one way or another for the past 15 years in a variety of different roles in the White House and elsewhere. So also happy to just give input on other questions folks might have. But why don't we quickly run through this piece? So learning engineering, we're just under 2 years into this program. The real thesis behind the program was to think about why is it that we're having such few wins in education when it comes to breakthrough insights. So if you look in other areas, defense, healthcare, other areas, you have the kind of AlphaFold breakthrough victories where people don't really expect a novel innovation and it happens. Education, there's a huge interest in it. We're investing a lot more as a country in education, but we're having sort of modest returns on our investment. And the question is, why is that? And one of the ideas that we've been really pulling is upstream of most of the ways people approach education, which is it's less on the delivery side of education and more upstream to say, what is the engine, the R&D engine for how we develop new insights on learning itself? And most of education operates on insights around how humans learn that have been passed down by the generations. And the question is some of those insights are very powerful, but what are ways we can actually bring a more computational approach to testing those insights together and at scale? So we've been trying to, just as computational biology is now well understood as a field, the theory behind our program is how do we actually invest in a number of ed tech companies, academics and others, to build a hybrid field that sits across learning science, understanding of learning, and computer science. So we do that in 3 ways: talent, platform instrumentation, and market shaping. And I'll quickly just run you through how we've been sort of approaching it. So on instrumentation, the basic thesis is the way we're actually going to speed up the way we learn about learning is to actually go where users are. So we spend a lot of our, rather than betting on the next new thing, we spend a lot of our time actually interviewing the biggest ed tech companies. And we say, which of these ed tech companies are interested in actually becoming hubs for the research community? They actually want to become the next telescope, the next place where all researchers come to run their experiments. So that's been, most people say no. Most ed tech companies don't want to be big hubs for the research community, but some do. And so we've been working hard to find those. So I'll just run you through 2 examples. One is Zern. Zern is actually an ed tech platform that is now close to in half of classrooms. It's super well reviewed. What we actually work with Zern on is actually building out its research instrumentation layer. So Zern has now, with our support, become the go-to place to understand how students, especially low-income students, are or not learning in the pandemic. And so, it's an example where I think this will help places like Zern win in the market, the fact that, they have this capability, but it's also going to drive the science of learning. And so one of the things Zern found is that there's pretty substantial gaps between how low-income students are doing inside the pandemic versus higher income. So the next one is a platform called Carnegie Learning. Again, it's a tech company. And what we're helping them do is basically build an internal A/B engine so they can actually test their learning science insights against each other. So Carnegie Learning, it's got 500,000 students on it. It's getting pretty rapid growth during the pandemic. But the question we asked was, how can we help them update their internal learning architecture so they can run lots more experiments? So this is a tool we help them build, which basically allows any researchers to walk up to them and basically run different experiments that would improve both the Carnegie Learning platform as well as drive the science of learning. So that's our first big strategy. Second big strategy is talent. How do we get more companies like Duolingo, which has AI at the center, created by finding the next generation of CS talent that's in university, recently out, and give them the support to basically, join existing companies, but also create their own. So the way we've been thinking about that is go as early as possible. So we created this thing called the Learning Engineering Fellowship. It's open to CS undergrads from a number of universities, and we've been sourcing folks who can become founders and catch them before, and basically try to find ones who are really motivated to impact education, are very strong technically, and how can we help coach and mentor them while they're in college to basically design their undergraduate experience against these big problems. So we think that's both useful for the space, but potentially we're going to get some really interesting founders out of it. So go as early as possible. The final one I'll say is what we call market shaping, which is what are the ecosystems that we want to build, so companies that have AI at the center, that are using this learning science and computer science approach, are going to win in the market. So the way we've been doing that is two things. One is we launched this big tools competition. We did the first one last year in the middle of the pandemic, global. We wanted to find lots of companies at all different levels that were staged. We did pretty well, got more than 890 applications, gave out 18 major awards. You know, those winning applications are poised to serve more than 10 million students. And I think we're, gonna run the competition again this year. We've also found some amazing organizations through it, places like Talking Points that have, that are gonna basically serve, in 2020, they served more than 100 million conversations between teachers and parents. And then our work, across the portfolio has also been able to engender a lot of co-funding, both from the major research agencies as well as from co-funders. And then the only last thing I'll sort of flag as another example of how the tools competition has worked. So one is, this is like an example of one of the small efforts that we supported. Our real hope is to go global. So this is, pretty old school technology, which is, they're actually using radio in the midst of the pandemic, but it's radio paired with SMS to be able to get lesson plans delivered on site. And the final thing I'll just sort of end with is one area that we've been really focused on is, it's easy to sort of talk about bias in AI, but how do we actually combat this by building sort of public goods that can really drive the space? And so one of the ways we've been going about it is finding really important challenges in education and basically designing a benchmark data set. It takes about a year plus for us to actually pull this off, but this will be the largest data set, for example, in student writing at the K-12 level. And we can release that so that tech companies and others can then build the next generation of algorithms that are debiased and that can solve major problems against it. So this was like a very fast run through, but sort of our way of sort of taking a sort of computational approach to the overall education landscape and thinking about ways where we can make a difference.
Thank you so much, Kumar. We definitely want to take questions from the audience. So for those of you in the audience who have questions for Kumar or Adam, you can either pop them into the chat or you can, I think there's also a raise hand function. So if I see your little hand icon raised, we can have you unmute and ask your question directly. We're a small enough group. But I did have a question maybe to kick us off, Kumar. As you kind of walked across the portfolio, I think I wrote down there's instrumentation, talent, and market shaping. Some of those seemed like they were probably more philanthropic investments, maybe the talent, the fellowship one, and others more on investment. So could you talk a little bit about what the different sources of or what different kinds of financing and funding you're providing across that portfolio?
Yeah, so we end up, we have not run it as a formal impact investing portfolio. So the way we run it is it's a mix of grants and investments. So, for example, one of our was this sort of MIT team that is focused on basically taking a number of algorithms around matching school lotteries. So it's like which student should get assigned to which school. They actually had developed the underlying algorithms for it, and they came to us and said, we think this should actually be a company because we want to go around the world and basically develop these sort of school matching algorithms for the top 100 large communities around the world. So for us, we ended up doing that as an investment, not because we, actually went through a pretty rigorous example of like, oh, this is what we think the market potential is. We sort of went in because we think the team is very good. It meets our thesis. They said, hey, it will really help us if you guys are actually on our cap table and that you guys can give us the first bit of investment that's sort of at that kind of seed stage. And so most of our investments end up being pretty early, and they sort of function as basically unrestricted capital to get the enterprise off the ground. And I think so across our portfolio, there's a number of investments, but we have not formally designated them as separate from our strategy. We just sort of say to the performer, choose the mechanism and the corporate formation that best serves your growth goals, and then we'll come in under that on whatever structure that makes sense.
Great, that's really helpful. Adam, I see you had a question. What is a Kaggle competition? Am I saying it right? Kaggle competition?
Kaggle competition, yeah. So Kaggle is the largest data science community online. They are, the way to think about this is like, it is a massive community where they're constantly running data science competitions. And so anybody can sign up. You can like find teammates, and then you could try to go after these really hard challenges. And as over time become into a place where you can actually show off. And so a lot of times people, when they're applying for jobs, will say, I'm a Kaggle Grandmaster, or I have this Kaggle score. And so both, it's an applied way for people to learn. So you'll have people teach themselves a bunch of machine learning through some set of courses. And the way they'll actually get better is they'll go sign up on Kaggle and then try to do well on Kaggle. For us, it's a really interesting way to sort of just find super motivated students and folks who are in the data science community. And I'll give an example. We actually just launched a challenge on Kaggle on a topic called readability. So it's like, when someone says, this piece of text is at a 5th grade reading level, what does that mean? Well, for a long time, that actually meant it just had words that were longer, multiple syllables, which is actually not, just a word being longer does not actually make it more difficult. So we actually have a readability challenge going on Kaggle right now. I think it's got more than 1,200 teams competing, all trying to basically develop a better algorithm for judging whether one text is more difficult than another text. And so, if those algorithms are good, you basically will see them in edtech products around the world.
Thank you, because as the mother of a 4th grader, I can tell you that the current, system for telling you whether this is at the 4th or the 5th grade level is mediocre at best. So I look forward to the results of that Kaggle competition. I saw a question in the chat from Ernie. I'm curious as to how do you think about measurement of impact across the portfolio and opportunity set, especially when working at a very fundamental level as you are? Do you try to quantify and compare?
Yeah, so we struggle with this because I think when you're sort of trying to build a field, which is really our aspiration, so which is like, we want to build the computational biology of education, a new integrated discipline. The way we think about that is how many people are actually doing work at that intersection. So one way we've been trying to track for it are just major papers that are coming out from the next generation researchers that actually have that hybrid. So we're looking for like, super upstream, but like how many papers have large and research results, that are sort of doing large scale research. The other way we've been doing it is just, how many folks are like companies and others are starting to use these approaches. And so how much is this sort of built in? But in the short term, we end up being very input oriented. So how many students are we actively doing? So we've, for example, built a pretty active learning engineering community. And so, we set the first OKR to be like, we should have 200 people in the community. And we just passed 1,100 academics and students and others in our learning engineering community. So we're still more on the front end of the inputs, but trying as much as to track for if a field is taking off, here are the sets of things you would see. And the nice thing is we're getting some uptake among, MIT and a number of the major universities are starting to build this into some of their specific area. The other way that we're looking to get traction is, in education, especially in education research, the biggest way you're getting field impact is if the biggest funders that are government are sort of operating at that level. And so both the National Science Foundation and IES, which is at the Department of Education, have both sort of started to echo our approach. So National Science Foundation for the first time is actually making education eligible for its large infrastructure research grants. And IES has been, for the first time talking about digital learning platforms as a research function. So those are at least some of the ways we sort of think like we're getting at least mind capture on some of this stuff.
Nice. Arnie, did that answer your question, or did you have anything to follow up with?
That's good. Thank you. Yes.
Great. Feel free to keep popping questions into the chat function. I am actually going to pull up a poll because we are quite interested in understanding what our membership appetite is for. Well, I'm hopefully going to do another poll for more content around impact investing. It's something that, Adam and I have been having this conversation for a very long time is, how can we really look at the impact we want to create in the world and then deploy all the different assets and resources we have at our disposal toward that end. And so as a group that's been very focused on the philanthropy part of it, we're interested in exploring to what extent our members are also looking to integrate impact investing as well. So it's hopefully going to pull up a poll. I don't know, Jill, I'm having trouble finding it. Oh, poll number 2. There we go. See if I can launch that and get some input on interest in continuing with some of this impact investing work. But I wanted to turn it back over to you, Dipti, because hopefully we've whetted the appetite for those who have been dabbling to go a bit further. And I want to make sure that we give them some ideas and resources for how they can take this journey further.
Yeah, sure. Happy to do that. Maybe what I'll do is hang for a second while I see the poll come through and let you answer that, and then we can continue. In the meantime, I'll start sharing my screen.
Perfect. I'll just give folks another few seconds to enter into the poll. And spoiler alert, very interested is winning. So yeah, high interest amongst this group, at least, to continue with our impact investing series. So so Dipti, I'll let you share a little bit more about further resources. And then, we have a few more minutes. So if anybody comes up with another question for Kumar, feel free to pop that into the chat and we'll try to get any more that come through.
That sounds perfect. Can everyone see my screen? I'm going to assume that's a yes because I can't see you guys anymore. So what is Toniic? Who are we? Toniic is a global community. We have about 500 high net wealth individuals around the world. And so the community is made up of a wide range of individuals, from family offices to foundations to individuals. And our intention is, how do we support the members and how do we help them become active impact investors or reinforce them in their journey? And so we do this through a few different ways. The first, and I think much like what the Battery Powered and the Battery is doing, is how do we form this incredible community so that there is opportunity for peer sharing. The second thing that we're really excited to do is actually provide educational resources. So as Colleen mentioned, the event that we did on climate impact earlier this year in collaboration with Battery Powered, as well as events like this, like bringing together folks so that we can learn more, so we can hear firsthand of what are leaders in the field doing. And I saw earlier in the chat, like how difficult it is to actually find investment opportunities. So Toniic, we have an investment team here. We're not a broker dealer, but what we do is help to amplify and support and curate the investment opportunities across asset classes for Toniic members, because the Toniic community is comprised completely of accredited investors. And the intention is, how do we collectively actually amplify that positive impact? So where is Toniic's membership? A huge percentage of our membership is here in the Americas, a number of members in EMEA, and a growing presence in APAC. And the intention with the community is that we really meet individuals not only where they're physically located, but also where they are in their impact journey. So if you're new to investing, if you're new to impact investing, we spend a lot of time supporting so that it becomes something easier for you to do together. And those that are deployers, those that are actively making deals and actively completing investments, we actually support and help those individuals. And then also, how can we learn from others? And so we have a huge percentage of our community that are also catalysts, those that you would expect to see within the impact investing space. And the intention is, by providing, we're a membership organization, but by providing this, we can really help you and achieve your journey as an impact investor. One of the things that we've been really excited to be thinking about here at Tonic and in partnership with the Battery is exploring doing a comprehensive year-long course with Battery Powered members. We have been running what is called our Activator series, which is essentially a leading educational program that is intended to provide individuals with the tools that you need so that you can actually deploy capital. This year we're running 2 programs, our 101 fundamentals, if you will, alongside our impact portfolio construction. In 2022, we're really excited to be offering 3 courses, not only our fundamentals, our impact portfolio construction, we'll also be introducing intermediate impact investing. And what we've been talking about here in collaboration with the Battery is actually providing a unique cohort experience for Battery Powered or Battery members, that not only would you go through the module and the learning experience, but that you would actually also participate in a small group so that you can get kind of the experience and the learnings and really go through exercises and curated content. I'm going to share just a tiny bit of what the course looks like, but essentially the course is a wide range of really going from thinking about the frameworks and what the ecosystem looks like to thinking about different ways to build your theory of change, or looking at how you can use the private debt as an impact investor. I will stop sharing, but what our thought was that in September or so, we would like to do a small gathering to get interest as to, is there demand from this? And is there interest in actually having a cohort for Battery Powered members? And with that, I will turn it back over to you, Colleen, to answer other questions, and then we can turn it over to Ernie.
Great. And Matt, Matt Spence, I see that you entered a question and Kumar typed a response. Matt, did you have any follow up to that, or did that get your question answered?
No, that was great. I mean, I think it's one of those things, I don't know if it's like a project of this, but to think about sort of what are, because when we think about things, or what's the way we can contribute, not just sort of to have the highest impact. So to think about, be it for profit, non-for-profit, something in between. I think that's always just an interesting debate.
Yeah, like I draw the distinction between 2 of the, so for example, Sam has worked pretty closely with Duolingo. I think Duolingo wouldn't have been able to scale as quickly as it has without being a company and being able to actually bring on investors and the huge ramp that they've had. But on the other hand, we also work with an organization, Talking Points. They've been able to add 2 million families during the pandemic, grow really quickly. They're designed as a nonprofit. I just think most nonprofits are not actually designed for growth in the way that people think about scaling. And so one should just be aware of that. And so at least that's the way we've been sort of thinking about it.
Yep, that's helpful.
Maybe for another day, Kumar, but I would love to have a discussion and debate about the scaling question and whether it's a function of the structure of the organization, profit or nonprofit, for profit or nonprofit, or a result of the kinds of capital that they can that they're able to attract. So I would love that. Let's save that one for another day. But I did see another question in the chat here from DRM. With post-pandemic activities already looking to be very dense in the fall, is it plausible for the Battery cohort to assess interest over the summer or share likely time commitments, costs, et cetera, in time early in the fall? Thank you. We would be happy to do that. And so yes, absolutely. We'll follow up with the folks that are here on this event tonight, as well as the ones who joined us under climate action, with some more thoughts about timing, what costing would look like. But yes, point taken that we should talk about this earlier rather than later, so folks can maybe slot it into their burgeoning social schedules that are starting to come back in this vaccine world. Yes, you're welcome. I don't see any other questions. So I think that one of the last things we wanted to do is actually open the mic up for Ernie Chow, because, and thank you for agreeing on short notice to say some words tonight, Ernie. Ernie has been a longtime Battery Powered member and one of our, just a super active and engaged member. We love you, Ernie. You always have great nominations for organizations and themes and very engaged. Joined us for our impact investing event, I believe it was back in March or February. around climate action, and has since become a member of the Tonic community. And so I just loved that journey. And so I just wanted to give you a couple minutes, Ernie, to share a little bit about what that has been like for you.
Yeah, no, thank you. And okay, so thanks. And I'm glad to share tonight a little bit. And as Colleen said, I've been a Battery Powered member for a long time, and I think I've got a background as a professional, investment professional over 20 years doing investing, very much in that mode that Adam had described before, sort of separate, investing work and then philanthropy, and that was kind of been increasing our life. And then I'd run a hedge fund for a number of years. More recently, was sort of transitioning to sort of just being a private investor, right? Investing for my wife and I, and as Adam had said, this, and he'd said it in the January presentation, sort of convinced me. It was really, you have the latitude to sort of think more broadly and invest in a way that reflects your values, right? And so moving away from the sort of institutional world of benchmarks and returns as a pure lens to say, what do we really want to accomplish? And so that idea that Tonic expresses, which is that impact investing is somewhere, there's a continuum from philanthropy to financial returns, and there are things you're trying to accomplish in the world with your philanthropy, and in some cases that may be better accomplished through investing, or it just may be the fact that you have more assets in your investment portfolio than you're giving away every year, and there's a dimension of time over which that takes place, and so it's good to pay attention to that. There's also some things in your portfolio may actually be actively working against what you're trying to accomplish in your philanthropy, and that seems sort of contradictory. So if you have the latitude to sort of correct for that, that's also an opportunity. And then coming from the investment side, I think we're all sort of aware that money is important, but not the most important thing in life or in the world. And in fact, some of the most important things are the things that are not that well measured by money. And so I think if you have this latitude as an investor to look beyond the financial returns and say, every investment has an impact, has some effect on the world. That's how markets work. What are those impacts? And to sort of take that into account when you're doing investing. And so to have a more holistic approach. And so, and I know I'm sort of wandering into sort of technical areas here that, whether it's impact investing or holistic investing or values investing or conscientious investing, to me, it's sort of all within that realm of thinking more holistically about what we're trying to do. So I've joined Tonic recently, and so far the experiences, I'm not going to claim to be an expert impact investor yet. It's only been 3 months. So, but really, the experience is very positive, and all the things that Adam talked about are there. It's a really strong community, very conscientious people. Some people have been doing it for a long time. One of the great things is hearing stories from people who've been doing impact investing for 20 years or more. And some of the journeys and lessons there. The deal flow is really strong. The organization is well staffed. We get lots of meeting planners. We still have to figure out manage the calendar, but there's abundant sort of ideas and things. We get to hear presentations like we just heard from Kumar, which is again one of the great things, hearing sort of well structured, well thought out processes around how to put these ideas together. So that's a great benefit. And so far, I would say, very much enjoying the journey. And I think that, there's still plenty to learn. And I think I've probably just really taken away from people doing it a long time. It's always a journey. There's always new things. There's always more to understand. There's a lot of technical work going on, I believe, around measurement of impact. And I think that's a very difficult area. I think, again, as a private investor, you have the latitude to be a little bit soft around that if you want, and to decide what we care about. And I think that's one of the things. There's this idea in impact investing that you can trade off financial returns for other kinds of impact and social returns. I also think, and this is my background as a investment professional, we also think about risk and return. So I think there's also the latitude to take a little more risk with things. There may be opportunities where the returns may actually not be less, but you're willing or able to dive in a bit ahead. We've had discussions about investing in underrepresented managers or underserved communities. Some of those things are things that don't look like they meet necessarily institutional metrics. As a private investor, you have the latitude to take a little more risk and say, okay, I know that this may or may not work out, or I'm doing things where it's not quite yet measurable, but I really believe in it. And so I think that's sort of an additional dimension I've been thinking about, the ability to take risks where sort of pure financial investments may or may not be able to assess those things. I think that's all I want to say right now. Just to summarize, it's been very positive. So, and happy to share with anyone else if you want to talk more about it. So.
That's excellent. Thank you so much for sharing, Ernie. Really appreciate hearing your perspective as you go down this journey. Adam, final words from you as we close up here.
Final words. Well, yes, I usually learn more than I give, I think, in these kinds of gatherings, and today is no exception. I was getting ready to call out our fellow member, Elizabeth Funk, but she disappeared from my screen just as I was about to do that, so she probably knew I would. But Elizabeth was, a strong Battery member, but very instrumental in my journey, like 20 years ago when we were both in really different fields. And she was a big, just a proponent of the power of business to change the world. And, so I guess my final word will be, get to know the people who are on this webinar, whatever this is, this meeting, at the Battery, as we come back to in-person meeting at the Battery and in Battery Powered. I commend to you that the folks who get attracted to show up at this kind of a conversation are some of the folks in the Battery that you will most enjoy getting to know. That's certainly been my experience. So let all of these wise people be your guide.
Great. Thank you so much, Adam. Any final words from you, Dipti?
No, just incredible gratitude, right? And we are so thrilled to be doing this, to being in conversation with you, and we'll certainly share kind of additional materials to keep the conversation going earlier than fall.
Yes. Great. Well, thank you so much, Dipti and Adam. Kumar, thank you so much for joining us today and sharing your approach. We really appreciate having you here. Any final words from you before we close up?
No, thanks for having me, and eager to stay in touch, and happy to be of service on this topic.
Great. And thank you,
Sam,
Ernie,
as well, for your help. Yeah.
Yes. Thank you, Sam. And thank you, Ernie, for sharing as well. Thank you to everybody who's joined us tonight. It was delightful to see you here, to see your questions, and to see where you went to elementary school. So really appreciate it. Thank you to Toniic. Thank you, everyone. Have a wonderful evening. Goodbye.